Outsource anything which doesn't add value to the brand or the company. If it's not adding value, if it's not driving revenue or adding value to your business, outsource it. It needs to be done, but don't worry about it. Don't do it yourself.
These numbers and these financials shouldn't be something that you dread and you just give over to your accountant. They should be the thing that actually drives your decision making and allows you to tell if you've gone down the right path.
I mean, we always say as soon as you set up a company and you're about to start trading, that's when you should use Addition or something like Addition.
Our guests today are John and Graham from Addition. The truth is that small and medium businesses are not getting the accountancy services that they truly need. Overpriced fees, do-it-yourself bookkeeping, no business insights whatsoever, and not to mention the old way of keeping receipts in a box. This conversation with John and Graham was very interesting because we covered huge pains that I encounter on a daily basis, which is running all the financial aspects of your business, bookkeeping and accounting. Specifically, we talked about accounting advice for store owners, the benefits of having a CFO, common money-related mistakes store owners make, and how to avoid them, and much, much more.
Welcome to the EcomXFactor podcast, where it's all about launching and scaling your business using sales funnels, automations, and smart marketing. And now, please welcome your host, the founder of EcomXFactor, Yaron Bin.
Hi guys, how are you?
Good, thanks, Ron. How are you?
I'm awesome. I'm very happy to have you on this call, and we already had like a 15-minute chat and it was already fun. So I look forward for you guys to share some more knowledge, and obviously it's going to be fun.
Yeah, thanks so much for having us, Ron.
Awesome, great. So before we dive into the numbers, and obviously you guys are accountants, so you hopefully like diving into the numbers. So can you share a bit about your background and how you founded Addition?
Yeah, sure. I'll go first. So I'm Graham, and I basically met John working in the corporate world at Thomas Cook Group, which was a holiday company, which is now bankrupt, but that's sort of by the by. Before that, I trained as an accountant, worked in a few larger organizations across a load of different sectors, and then ended up working in kind of like strategic finance, I suppose, in larger organizations. That's why I met John. Then I decided I wanted to get out of the corporate world and work with small companies. And I really felt like when you come up with a plan plan of action, you actually see the results of your ideas very quickly in a startup in a small company. I really wanted that to happen because in corporates it was very slow. Mm-hmm. So we wanted to go out and work with small companies, started doing that as CFO. So portfolio CFO, working with lots of different small companies and startups, helping them raise money, whatever it was. And then every single company I went into, I wanted to get hold of their numbers and look at their books and understand the business financially. And every single time the books were either didn't exist or they were a mess or they weren't kept up to date properly. And I thought there must be a solution for this. I mean, in larger companies, the numbers are clean generally. And so why can't we bring that same rigor and having clean numbers to small companies too? And let's use software to automate it. And that's where Addition was born, really. We thought, okay, let's go out there and automate these mundane processes, improve the accuracy, and make sure that people get really clean numbers so they can run their business better and ultimately have a more successful business, which is one of the other core values of Addition. Yeah, and that was 3 years ago, and we've grown ever since then, really.
Yeah, and I'm John, by the way. Addition as it is now, we've got about 140 clients. We've got a team of about 13 specialized people within our team, and we're a software-enabled company. Mm-hmm. So as Graham said, I met him maybe 5 or 6 years ago, and at that time, I think we both shared a passion of actually wanting to do things. I started my career as a consultant where you're constantly advising people of the best way, let's turn right instead of left. But you never actually implement that plan and see how hard it was. So I got the opportunity to join Thomas Cook, met Graham there. And it was actually the same sensation of, oh yeah, the management team have put in this plan or put in this idea that they want to do. And then they never quite deliver it, or you never ever see it hit its fruition and its actual intended impact on the organization or on the company. And so Graham's frustration hit quite quickly. And after a couple of years, you went off and did your thing. I stayed there a bit longer. and then eventually moved into the startup world and became a CFO of a tech startup in London, which was wonderful. It was great. But what I realized when I went in there is I had no idea, after working in finance for 14 years, how to do all of this stuff around bookkeeping and filing returns and doing all these statutory things. I had no idea whatsoever. And Graham and I had been friends since we were at Thomas Cook. So I reconnected with him and said, Graham, I need some help. I'm really struggling here. Can you help me out? Got Addition in. And instead of our organisation paying roughly £25,000 a year for a bookkeeper, Graham's organisation, Addition, was a tenth of the price, or maybe an eighth of the price at the time. So phenomenally cost effective. Because Addition uses software, things were so much more accurate. So I could rely on the numbers. And I think the other passion that Graham and I both share is that these numbers and these financials shouldn't be something that you dread and you just give over to your accountant. They should be the thing that actually drives your decision making and allows you to tell if you've gone down the right path. So we really want to get our businesses, instead of acting on hindsight and gut, to act on insight. And we really believe that Addition is doing that. So I guess a little bit about Addition, Graham, in terms of where we are now.
After John was a customer, then he decided to join as COO and kind of co-founder. So we're doing this together now.
Yeah, and it's great. I absolutely love it. We're the masters of our own destiny, live and die by our decisions, which has its highs and its lows. So that's great. But Graham and I are really good friends. So it doesn't feel like work, which definitely for me, I don't want to put words in your mouth, Graham, but for me, it feels that success. Where when you're doing something every day and it doesn't feel like work and you're actually helping people, it feels great. I wake up in the morning, I'm not worried about coming into work. It's so relaxing. And yeah, we get stressed and our clients are demanding and life is life, right? But generally it's every day is great. And we're trying to get our companies that we support to get to that mindset and take some of the elements that they might find stressful and we'll do it for them. We have 3 core offerings that we've built up over time to try and take that stress element off people, but also impart some wisdom. As I said, I've been a CFO for a tech startup and held senior finance positions in large companies. Graham's done the same thing and raised, how much did we work out we'd raised?
2 billion. 2 billion or something. Our careers we've raised. So we've raised a lot of money.
Yeah. So not us just not alone, going out and we created a startup and we raised $2 billion, but we've been involved in transactions, whether it be at Thomas Cook, whether it be at startups, whether it be at medium-sized companies, where over the course of our careers, we've raised in excess of $2 billion. So some of that might be a £50,000 debt raise for a company, which to them is like their Everest. Or when we were at Thomas Cook, trying to get a new $800 million loan facility was their Everest. So it's all relative. So we offer that core element of our business, which is getting your numbers clean, but we also offer a CFO service, because what we've realized is that a lot of small companies can't afford a full-time CFO. Maybe the salary of a CFO in London is £150,000. If you're a startup, you can't afford that. You might be able to afford 1 or 2 hours of that every month. And those 1 or 2 hours could be incredibly valuable to us.
That's it.
And that's our proposition with regards to CFO services.
Most startups, they're not ready for a full-time CFO because they just don't need it. There'd be nothing for the CFO to do every day. And so we created this, again, using software in a smart way, creating a bespoke report for the client's business, not just financial, but also incorporating non-financial drivers too. And then also giving them a set number of hours each month of advisory, and also being on the phone whenever they needed something. They can just call and ask a question. I'm going to call my CFO. And it costs, £400 a month or something. Yeah. So it's really cost effective for that.
Let's assume I'm an e-commerce store owner and I have a team of VAs. I'm running my business in different countries, Shopify store. I have QuickBooks integrated, and now I'm kind of debating if I need help from someone. I mean, financial help. So when should I consider hiring you guys or different CFO services? And what would the scope of service look like? And this is a 3 questions into one. And if you can also share some case studies, or what happened with your real client that came to you, and what advice do you give, and how does this move the needle?
Yeah, sure. We always say, as soon as you set up a company and you're about to start trading, that's when you should use Addition or something like Addition, because it's very cost effective. It starts at less than £100 a month, and everything is managed for you. Your bookkeeping, you probably use, if you're starting an e-commerce store, unless you're a developer, you're probably using Shopify or something like that. We'd be fully integrated with Shopify. We'd automate all of your books. We'd make sure that your books are kept up to date in real time and you have all the information ready for you. We'll also make sure you're fully compliant as well. So we'll do all your tax returns and everything else from day one. So it's kind of like, okay, for less than £100 a month, just pay for the solution. Everything's dealt with. One less thing to worry about. And that's the key, I think, when you're starting a business, the less things there are to focus on, the better. It just helps you focus on the thing that you're good at and the thing that you're passionate about, which is your product and getting out there into customers' hands.
The analogy that I really like is the question you asked Ron about when to do it. The majority of us go out and buy coffee and use a laundrette and have a cleaner in for our apartment. Those are things that you've outsourced to someone else because either you deem your time more valuable doing something else, or you believe they can do it better than you. Yeah. Like my cleaner can definitely do ironing better than I can. Mm-hmm. He's a great guy. He can do the ironing better. Uh-huh. My cleaner can definitely clean the oven better than I can. And my barista can make a better coffee than I can. So why not imply that to accounting? Yes, you could download Xero or QuickBooks and you could do it yourself, but you have to pay for the license and then you have to spend time doing that. Wouldn't a better use of your time be growing your business? Growing that business to a place where online sales are driven and these ratios that people talk around, your cost of acquisition per customer against the long-term value of that customer is actually increasing and increasing, rather than you spending 2 hours each month doing bookkeeping. So that's our proposition, is outsource the things that you either aren't good at or don't have the time to commit to. And because we're the experts in that space, we can do it at a very cost-effective way because we're using economies of scale and leverage.
And outsource anything which doesn't add value to the brand or the company. If it's not adding value, if it's not driving revenue or adding value to your business, don't outsource it. It needs to be done, but don't worry about it. Don't do it yourself. That's our mantra.
Yeah, I guess there's the first answer, Ron, of when. We believe that maybe it's not immediately as you set up a company, but very, very quickly.
As soon as you start trading.
Yeah, maybe even just before you start trading so that things can be set up. But pretty much around that point, you should definitely consider getting an accountant, bookkeeper in there. And then in terms of CFO services, so one like the statutory compliant, if we look at CFO services, we would argue that again, to consult people is very, very valuable. One of the jobs that I had was at the Underground in London. Mm-hmm. So huge organization that employs 17,000 people. And we found over time that a more diverse team is a safer team. So just having people of different backgrounds, different ethnicities, different genders, different persuasions, different socioeconomic upbringing creates a safer team because you challenge each other, because you've got different backgrounds and different perspectives. We believe that you can use that with regards to your business. Going and speaking to friends, family, angel investors, mentors, or people like Graham and I, just to bounce ideas off, to say, have you thought about this? Have you thought about that? So we believe that once you've set up that bookkeeping element and you've got the statutory stuff, then the next step is to test out your theories and your ideas with different groups of people. And we believe that because of our experience, we're one of those people that would be useful to consult with.
Just thinking of a few instances in e-commerce in particular, which is a big focus for us. Mm-hmm. We have a few clients that really make use of that CFO service, particularly clients that they've been using our core service, which is the kind of like the basics for a while. They've grown their business. Their e-commerce business is growing really well. They're growing month on month. Mm-hmm. All those key indicators are working really well for them. And then they get to the point where they think, okay, now what we need to do is we're really growing fast, but we've got a bit of a working capital, a bit of a cash flow problem where we need to buy our inventory from China or wherever before we sell it. And we're holding too much. And they get into that world of, okay, how do I manage this? Can I get some debt financing? How can I fund that? Yeah. And that's a good time to reach out to a CFO or someone with that expertise who's got connections that can introduce you to lenders, whatever it may be, to help sort of ease that situation for you so that, again, you can focus on doing what you do best, which is the e-commerce side of things. Mm-hmm. We've had a few examples of that where businesses have grown so fast they need that support.
We have a Instagram influencer who has set up a side project for a shower product that delivers vitamins through the water. So the shower head is specifically designed to make sure that water is incredibly nutritious to you when you're showering in the morning. But they've had large working capital problems because they're buying in the stock, and then it takes time for it to sell on their e-commerce platform. So although all of this stuff is set up, and I'll make up the numbers, but they're buying the units for £10 and selling them for £100. So on the face of it, it looks incredibly profitable. But if you have to buy at scale from your manufacturer and you have to buy 10,000 of them,
demand is increasing all the time.
You've suddenly got £100,000 or dollars that has gone out. And now you have to sell that before you can buy your next order. So people founders that we've worked with look at the P&L and they say, I buy for 10, sell for 100. This is a business. Mm-hmm. They don't often think of what accountants call the working capital cycle, or maybe to simplify, the cash flow cycle of buying before you can sell. So that was one example we had. We've also got a mezcal brand, which is it tequila?
Tequila is a kind of mezcal. I don't have to be an expert, but that's what the founder told me.
Those guys have the same thing. They're selling online, and they're selling multi-jurisdiction as well. One of the things, if you're an online marketplace, you don't know where your customer is all the time. As in, they've landed on your website and they order your product. You only know where they live or where they want the product shipped when they've filled out the final bits and pieces of shipping instructions. So those tax implications as well, we get a lot of questions about that. And Graham and I don't profess to be tax experts. And this is where we draw on our network of people, where we've worked in large organizations and we know people, and we consult with them, because no one can be an expert on whether selling in Israel or whether selling in Georgia or whether selling in the UK, what tax jurisdiction it fits in. So we just like to give our clients the best insight and the best knowledge that's available by consulting the experts as well.
Yeah. There's definitely an element of research involved. But I suppose because we know what we're talking about, the research is a lot easier for us.
Exactly.
He has no idea.
Yeah, and also the contacts that we've built up over our career. We have people that we can rely on and that we trust, that we know that we can give a very quick answer rather than going through a laborious.
Something we've seen a lot of recently, actually, on sort of like international VAT transactions and things, and with the Brexit thing. There's lots of complications, all that stuff. And people are very confused. And also now these days, with everybody working all around the world, okay, so which country should I pay tax in? I'm employed by a US business, but I live in Georgia. How does that work? Mm-hmm. And I don't think the world's necessarily figured that out fully yet.
Yeah.
It's in this sort of transitional phase. So that's something that comes up a lot at the moment.
Yeah. So the majority of our customers, all of our customers are either UK or US based. So that's our core at the moment. But that question that Graham raised there is something we've been asked loads. And what we found with the UK government is they haven't yet caught up yet. So they're trying to figure this out as well, because as you are, Ron, you're living in a different country than you have done previously. And people are doing that all the time. And as an employer, you might not actually know where your employee is living. If they haven't told you they've moved address, how does that impact you? Some of our larger companies that are multi-jurisdiction are finding that, where they've started to employ someone that's actually based in Hungary or someone that's based in France or moved to Germany to work from there, and just how that all works. So we're working through those problems with them and just coming up with the best solution at this time.
Yeah.
For me, I think it's very powerful to have someone with knowledge, because for me, I spent the whole last year trying to optimize my taxes. And I was wondering, because I'm a digital nomad, so I can basically optimize this and choose wherever I want to be a tax resident and where should I form my company. And I've been wasting a lot of time on forums and blogs and Slack groups. To me, it was a waste of time. Instead of just contacting an expert that has a network of experts that he can ask his colleagues from other countries and get details about this, because a lot of sellers also face the issues that you mentioned in regards to VAT, sales tax in the US. Do I have Nexus? Do I need to pay? So it's a lot of complicated stuff. In regards to this, I wanted to ask you guys a question. What are common mistakes that whenever a client comes to you and you see that he's been doing something really off, really wrong, that can be very
damaging.
Cause a lot of damage? Exactly, a lot of damage.
On that, actually, which happens a lot with our US clients, mentioned it briefly then, is sales tax. Mm-hmm. And nexus in that state, and making sure that you're staying on top of the thresholds in each state and making sure you register at the right times. The thing in the US is quite complicated. You don't have to. If you're a small e-commerce business, you actually probably only have to register in the company that you're registered and where you hold your product, where you ship it from, where you have a nexus. As you start growing, and every state has different thresholds, you have to be aware of what the threshold is in every state to know whether you need to register for sales tax or not in that state. And that's, to be honest, for a small business owner, that's quite onerous. That's really difficult. So that's a good example of why you should hire someone to look at that for you, because that's just a minefield.
Yeah, the other thing I would add when people come to us is they don't always think about the legal and company articles and setup and capitalization table. They're just like, yeah, I gave shares here. I've got these options. I did the articles. I just did this, and I can do that. Actually, those things are the rules of your company, and they might impact you in the future. So we have one startup that's raised quite a lot of money, almost £7 million to date, and a lot of their legal framework and legal structure isn't actually appropriate for the size of business they are. And there's a lot of flaws in it that can catch them out. So the founders actually can't make as many decisions as they thought they could because their position on the board isn't as strong as they thought it was because of what they did at the start. And I guess that's what we touched on at the very start, Ron, is just consult that expert early on. Those little things that you can sort out early that are really easy, checking one box rather than another box, can make a difference on where you're going to be. We had one startup who just raised £250,000 seed funding. Brilliant idea to create interviews for products. Wonderful idea. I hope it goes somewhere. And he was saying, should I set up a parent company and put the investment in a subsidiary? Because then if I sell it, it goes into here and I can invest tax free. And we're like, it's really great that you're thinking strategically. Can you think strategically about your business and about how to make sure that your product is wanted by the marketplace, rather than thinking of some complicated corporate structure, which, come on, like,
doesn't matter
right now. Like, don't worry about that now. Get your business off the ground, and then we'll put the correct structure in place for when you get there. I'm kind of contradicting myself maybe, but you don't actually have to have everything set up perfectly when you first start. Just knowing that you have to consider these things at different junctures. So when you make those strategic decisions, you consider everything. It isn't just how much profit I can make and how much investment I can make. What does all of this, let's in inverted commas call it the boring stuff, the compliance stuff at the bottom, how does that impact each of my decisions?
I think basically what you're saying is surround yourself with advisors and consultants and just ask them the questions before you go ahead and do something.
Yeah.
You get super excited when you start a company, just go and do it. And you think, okay, yeah, just do this. Oh God, I've just set myself up in the least tax efficient state there is, So it's just having that someone to speak to and just make sure you're doing it, you're thinking about it in the right way. Like you said, the person with the holding company, do you really need that now? You're still at idea stage. Maybe let's think about something else. So,
yeah. But Ron, you mentioned exactly what we found a lot as well, is people start doing a lot of Googling, a lot of Slack groups, a lot of Reddit channels, and you end up then suddenly you're watching a video about two cats having a fight. Like you just suddenly like down this rabbit warren and you don't know what's going on. Whereas you could just have a structured conversation with someone through your network. You must be able to find someone, or maybe it's not the first person, it's the second or the third. People always, or in our experience, we found they always know someone. And you could have an hour structured conversation with a very clear agenda. This is what you want to get out of it. And that person will be able to deliver for you. Now you've got 10 hours to watch videos about cats having fights rather than having to go in these rabbit warrens of Reddit and Slack and Google.
Although an element of research is quite useful in some cases, because even that advisor, sometimes you get a bad advisor. So
I agree.
Sometimes oh God, I've listened to this person for an hour. Is what they've told me actually correct or not? So you can sense check. Use research to sense check what they've told you.
And we've got a great blog on our website about, I think it's the top 8. It's either the top 8 or top 9 or top 10 questions to ask your accountant. So we're trying to just educate people that you might not be finance literate, and you're going to now just go into business with an accountant, how do you know they're the right fit for you? What sort of things should you be asking them, and what sort of answers would be a good answer? So we've written a blog like that because we have this with when we're speaking to lawyers or when we're speaking to software developers or marketing experts. We have no in-depth knowledge of those sectors, but they're vital to our business's success and a lot of our founders' success as well. So we just have to make sure we're asking the right questions and we can understand. So we've put a nice blog on our website about the top 10, I think it's top 10 questions to ask your future or your potential accountant.
And how to choose an accountant, isn't it?
Yeah, how to choose an accountant. Yeah.
That makes a lot of sense, and it sounds like a very helpful piece of content because, as you said, like you don't know what you don't know, and once you go hiring, some like a service giver seem very impressive because he knows how to sell, but he isn't necessarily the right fit for you. And it's also about the dynamics. So even if he ticks all the boxes, if you don't have good vibes from him, so it's not necessarily the best choice for you.
Yeah, very true.
Trust is the biggest one for us, Ron. You have to be able to trust that person and know that they'll go when needed above and beyond for you. And that's what we want to give to our clients because that's what we'd expect from other advisors that we use.
Yeah. And I think that a really important point is that we value automation and AI and whatever else is happening in the world and that sort of transformational change. But we also really strongly believe that no matter what happens in that space, there's always that element of interpersonal and trust that you need from someone. So if we just automate everything else and then founders can just use our brains to get whatever they can out of, that's a really successful business, because you shouldn't have to pay someone to do all the transactional stuff. Mm-hmm. What you really should be paying for is someone to give you some really good advice. That's where the value is right now in the world.
Do you have any examples that come to mind for like e-commerce store owners that things that they might be overlooking? It's kind of similar to the prior question, but it's a bit different.
Yeah.
So anything that, for me, I already automate my transactional stuff with QuickBooks, and I think it's enough. But maybe I don't know what I don't know, and maybe there are a lot of opportunities that I'm missing. So, and also the listeners. So, do you have like more of these like overlooked stuff and more opportunities?
The big one for me is, which we see a lot with e-commerce businesses, is poor inventory management and lack of accurate gross margin accounting. So we see a lot of people, I've got Shopify and put my numbers in here, blah, blah, then I'm automating my sales. And you look at your P&L and you've got your sales and everything you bought. Doesn't reflect accurately the performance of your business. Because what you really care about is, what have I actually sold these products at? And what did I expect to sell them at? And so that's something which is overlooked a lot, is that really solid inventory management. And also knowing, okay, how much stock do I actually have? I know Shopify says I've got this amount or whatever tool you're using. Is that right? Because I'm just typing these numbers in. So really robust stock and inventory controls, and then reflecting on that solid inventory accounting so that you can really see what your underlying gross margin is. Because if your gross margin doesn't work as an e-commerce business, your business doesn't work. So inventory management and gross margin are two important things.
Quick favor, guys. If you enjoy these shows and have been a listener for quite some time now, we would really, really appreciate it if you could take the time to give us a review on iTunes, Stitcher, or whatever your preferred podcast app may be. Having lots of ratings and audience feedback makes our show become more visible across multiple platforms. And it also supports our mission of helping as many people as possible to become better marketers and better entrepreneurs. So if you're not driving and it wouldn't be dangerous, pause this thing right now and give us an honest review over your podcast app. And we will love you even more than we already do. Thank you for taking the time, and I hope you enjoyed the show.
Yeah, I guess there's two that I would add to that as well, and maybe one's a bit tangential, but one of the things that Graham and I really, really push on all of our companies that we support is CAC to LTV. So your cost of acquiring a customer over the long-term value of that. So many fans are like, I'm just going to do loads of Instagram ads. I'm just going to do loads of Facebook. I'm going to do Google ads. And they don't actually build that into their gross profit margin, because it isn't necessarily in there. You've got your sales, you've got your cost of those sales, and that's your gross your gross profit and therefore your gross margin. They don't look at actually the cost to acquire that customer and its long-term value.
We have a few e-commerce businesses that have fallen into that trap recently, where they're basically spending way too much on marketing, to the point where their business doesn't work. Because they're spending more to acquire a customer as what the lifetime value of the customer is. So it fundamentally doesn't work.
And that is something that's so important, because you might be able to sell that £5 product for £10, but if it costs you £10 to market that, it just doesn't work. Even if that customer repeats once, you're still just breaking even. So that's an incredibly useful metric that we would recommend. Then the other thing as well is we found in our experience that the e-commerce store owners are quite set on, I'll have a store, I sell direct to the customer. It's all B2C, it's all business to consumer. They don't always think about that pivot to be business to business. We have some companies that sell on eBay and other channels where you're paying commission to eBay and you're also paying commission to PayPal when the payments used to go through PayPal. If you can sell B2B and maybe it's into a different marketplace and you're selling in bulk, you don't have as many of those fees. So your profit margin can go up. So just by thinking a bit differently about your customer, and actually sometimes reducing your ego a little bit and saying, you know what, I don't necessarily have to go and sell direct to the consumer. They don't necessarily have to see me as the product. Then you can go business to business. Because obviously if you've got your own store, then that's a different ballgame. But the reason why those 2 points are linked to me, that link together for me, is you might be spending a fortune to drive traffic to your own store, which makes your business not possible. Therefore, you use eBay because it's already a platform, but you pay a lot of fees to do that. So why not maybe pivot a little bit and see if you can find a wholesaler that's willing to take 10,000 units off you in one go, rather than having to find 10,000 customers.
Oh, again, another one for me that e-commerce businesses maybe don't think about too much, which is churn rate. So, okay, what is my churn rate as a business? And maybe they know that, okay, my churn rate is 10% or something, whatever it is per annum. It's probably a lot more than that. But what they don't understand then is, okay, my churn rate is this. Can I understand why I've got that churn rate? And the key is to actually understand, why are those customers churning? Because then you can actually change your business, whatever it is that those customers don't like, so they reduce your churn rate, which has a huge impact on the value of your business and the profitability of your business.
I think Ron, the other thing as well is you were mentioning QuickBooks or Xero or one of these accounting tools. Like, that is doing the financial information. What about all the non-financial information that you've got? You know, the landings to your website, the bounce rate, the conversion, where do they drop out of the funnel? All of those non-financials that don't actually feed into QuickBooks or Xero. How do you analyze those? For Graham and I think we actually believe that those non-financial metrics are sometimes more important than the financial ones, because the non-financial ones should deliver the financial results if you've set your business up with the correct goals and the correct drivers of success. So finding a tool to be able to capture those metrics is really key for us, and that's what we do with a lot of our e-commerce businesses. Is we do all their books for them and we automate that, but we also suck a lot of information automatically from their sales channel sources or from their website to present non-financial trends and KPIs to them, because that's where the key decisions can be made.
Definitely, that's where you can really drive value for your company. I mean, I think ultimately we're just saying that data-driven management, data-driven business is the way forward.
Totally agree. And I think that one of the issues, I don't remember if you talked about it before going on live, but for e-commerce, there's a very low barrier to entry. It's very easy to open a Shopify store, but I always say that the barrier to success is very high because there are a lot of players, and a lot of people enter this game with not a lot of financial background or business background. They started it as a side gig, as a 9 to 5 before they were employees. They don't know nothing about handling like the business. I speak from my own experience because I knew shit about this stuff as well. I lost like 15,000 quid just because I miscalculated the hidden fees, and I was running in a very high pace in Facebook ads, and I miscalculated the hidden fees, and I didn't calculate the refund rate. And suddenly I realized, okay, my bank account isn't a direct derivative of what I thought it should be.
Yeah.
It was 3 years ago. It didn't happen yesterday. Otherwise I would have been embarrassed. But but I know this happens. So being on the numbers and being data driven.
Knowing your numbers, that's the key.
Ultimately, like owning your failures and it's the best way to learn. And it'd be great if someone could tell you all these things and therefore you would never make a mistake, but you will never make that mistake again. You will always look for those things. And Graham and I are trying to do is at least educate people. You need to think about this. You need to think about that. The best lessons are always the ones that you learn yourself, but hopefully we can educate these founders.
Not all of them mistakes. A lot of them I mean, it's just human nature. You don't always listen and you just go and make mistakes yourself. Fine. That's what you have to do, isn't it?
Yeah.
But yeah, I think maybe it's like people need to think about e-commerce businesses not as an e-commerce business and not as a product. You're in the business of data, basically, and you just need to make that data work.
Yeah.
Because a lot of the time, a lot of e-commerce businesses don't even touch the product. It goes from A to B, and you are running your business on your computer.
Yeah. So maybe it sounds quite obvious, but don't run your business on your bank account, because it's not going to be a reflection of how things are going. You might have upcoming payments. Normally tax payments are every quarter, for example. So it might look great that you've got $100,000 in your account, but you might have a $50,000 tax bill coming up soon. So it's being forewarned, and it's actually creating a cash flow forecast and monitoring to that we find key as well. Is set your goals, set your targets, think about all those hidden things, and the way you can get there is by consulting people that have been there and done it, and track against that plan, and hold yourself to account. Normally a Shopify business owner is a sole trader doing it on their own as a side hustle. Make sure you challenge yourself. Is this going the way I thought it was? Don't accept, oh yeah, it'll turn around in a few months. Insanity is doing the same thing and over again, expecting a different result. Change, iterate. You have to evolve if things aren't going the way you thought they were. And sometimes you may have to hit pause and start again.
Do you guys have any, like, I love the suggestion and I totally agree, like hold yourself accountable and also consult with consultants, because it's very easy to overlook this. And sometimes it's a matter of ego, or sometimes you don't have enough resources to pay for consultants. But what I understood based on my experience, so always paying a consultant is going to be ROI positive if you hire the correct consultant, and it's never too early, in my opinion. But do you have any other like low-hanging fruits, assuming that listener of this podcast doesn't go ahead and hire you guys this moment? Do you have any other low-hanging fruit that you think that they should do? So maybe have a specific Excel file, like you said, not counting only on your bank account and also managing the cash flow, like stuff like this? Yeah,
sure. We did a workshop with 20 food businesses recently, and the thing that we gave them, which is relevant to your listeners as well, was an executive scorecard. And it's a simple Excel template where you just say, here are my business by its operational key performance indicators, its financial ones, and our commercial ones as well. So if we do it from the end first, you've got what customers am I trying to target? So maybe you're trying to get into different channels, or maybe it's your customer churn rate or your cost per acquisition. Just record that information and track it, and then traffic light it. Is it green? Is it where I thought it was going to be? Is it amber? I have to do something, or is it red? And if you do that for all of your commercial ones, then into financial, what's my gross margin? What's my cash burn rate? So how much does it cost to run your business? Maybe you need to have someone to help sell or a programmer to help you. So what are you spending each month, and how much money have you got in your account? How long is it going to last? Then moving all the way back to your operational ones, what's the lead time from an order to when it can be shipped? And just think of the things that drive your business, record them all, and then track them. Maybe it's weekly, maybe it's monthly, but make sure you track them. And if you use that traffic light system, you can see immediately, okay, what do I need to look at? I need to look at customer because that's red, and I need to look at gross margin because that's red. I'm very happy with fulfillment time. I seem to have nailed that. It's green. It's what I thought it would be. And it just helps focus you on the things that matter, because this executive scorecard, you are the executive. It's your scorecard, your measure of success. And it's a lot. And you've said, these are the 10 things that I need to focus on. So that's one of the tools that we shared recently.
Yeah, it has, exactly. It's in Excel.
Yeah.
It can be driven by Xero if someone's using Xero or something.
Yeah.
And it has your targets for each main area of your business. And then you plug in what you actually did, and it tells you whether it's red, amber, or green. And it's super simple and free. And to be honest, if you run your business on that, you're probably going to have a really good business.
Yeah.
And it's very basic.
And then like you said, Ron, picking some things that could maybe be done without the use of an expert or a consultant, or without spending a lot of money, is in Excel or Google Sheets. Create yourself a cash flow and make sure you challenge yourself and do as much research as possible on all of those hidden fees. Okay, when am I going to have to, let's imagine we're a Shopify business where we buy something from China and we sell it in the US. Mm-hmm. What's the lead time? How do I have to pay up front? What happens if there's an error? What happens if there's an issue with shipping? Do I have to pay any sales taxes to get the goods into America? Or can I drop ship and therefore it's not on me? How does it all work? And think about the cost of each of those things and build that in and say, okay, before I make my first sale, how much cash do I have going out of my business? Then the other thing that we're really hot on with our customers is, think of your expected sales forecast, and let's call that your normal case. Then do a downside case. So what happens if instead of hitting 10 customers a day, you only hit 5? Mm-hmm. And what happens if your conversion isn't 50%, it's 25%? What has to happen? So you've thought about, can my business still survive if I don't hit what I thought I was going to hit? Does it still work? Because then maybe you don't want to commit to buying 10,000 units from China. You only want to buy 5,000. Don't overcommit and sink the cash just because you think the demand is going to be there. You need to see the demand and actually feel it and actually have it come in, rather than just say, oh, I've done some research and I found this great report that said that 10,000 people want my product.
Yeah. Until
they actually buy it from you, they don't want it.
I agree.
They just said they want it. We've seen that numerous times. Like, you never know if your business is going to be a success until you launch it.
Yeah, and I think definitely thinking about those scenarios, and that's also free. Just the founder themselves. I think, okay, I've got this plan which is great, and you see them all the time. Revenue's going to go like this. It's going to go up on an upward trend, growing, 20% month on month forever. Nice. Think about the case when it doesn't, when it just stays flat, because it's going to stay flat for a period of time at some point. Usually, with all of the costs that you've got in your business plan, can your business sustain that if your revenue stays flat for a period of time? And just ask yourself those basic questions, really, because that's a key thing. I mean, because we often see people create a plan. Oh yeah, revenue does that in the plan, and so revenue does that and costs do that. So I'm going to go ahead and put all those costs in. I'm going to hire all these people and do everything here. Mm-hmm. And then, 3-4 months in, the revenue isn't going up like that. And they think, oh God, what's going to happen? I'm burning more cash than I thought. What do I do? And it's too late because you've already put the cost in. Mm-hmm. So just be smart, make sure you're hitting those indicators before you start bringing the extra cost in.
Yeah. And I guess just to finish on that, I just thought of one other thing, and is, depending on what your business is, there might be grants and credits and governmental support that you can apply for. Mm-hmm. Maybe you're doing something innovative. That company that Graham and I mentioned earlier that's developed a shower head that releases vitamins in the water. That's an innovative product that doesn't exist, or at least from my knowledge, doesn't exist anywhere else. So maybe you can get some governmental support. There's some tax credits in the UK that we help companies with. But there's various things that governments do because they want to promote young businesses that are trying to do something different. So get out there and find out. And if you don't ask, you don't know. So make sure you're going out there and trying to find out.
There's lots of grant funding.
Lots of grant funding around.
Another low
maybe there's in the UK. I know not a lot of your listeners are UK based, but just to give you an example, in the UK they've developed a scheme called the Kickstarter scheme. Whereas if a young person has been unemployed for a number of months, the government will actually pay for them to come into your business. So you don't have to pay their salary. So you're getting a free resource to help your business grow. And that person's young, they're hungry, they want to work, and you're getting them for free. So get out there and look what's available from your government. I know the British government is very supportive, but hopefully all of your listeners, local governments, are equally as supportive as well.
This is something very powerful that I didn't really think about, like looking for grants and schemes that are offered by the government, which can really help with the cash flow. And this relates to what you guys said about like also planning for the worst case scenario. Because many times, as I see this happens a lot with e-commerce store owners, they find a product, they see success, they start scaling, and then PayPal or Stripe, they hold their money. And then they encounter a lot of cash flow problems, and suddenly Facebook blocks your account. This happens often with dropshippers and e-commerce store owners. And you're in a storm, you don't know what to do. And
that sounds just like really annoying, to be honest. But I have seen that with PayPal before and Stripe, where you get set up and they're quite light on their anti-money laundering checks when you first set up, and they don't ask you for too much. And you start scaling and they block your account because they think, what's going on here? There must be something dodgy, or it's a control to think there might be. And that happens quite a lot. That's really frustrating. I mean, they need to figure out a better way around that, really.
Yeah, we don't know. We actually don't know the answer there. We've seen it with a couple of our clients where that's happened to them. If you're doing this as a side hustle, it's trying to dedicate as much time to keeping it going. And if you're doing it as your main income, then you've just got to dedicate all the time to fixing that. Because if your store's not open and you're not able to extract the cash, why are you doing it? So you need to find a way.
There's probably a very simple, maybe it doesn't exist right now, but if you're setting up a PayPal, just set up a PayPal folder on your computer or something. So when that happens, you're ready just to go, boom, upload the documents. Simple stuff like that. Because it's probably going to happen. So you need to act with speed.
Before we wrap things up, another thing I think is very related to this conversation I want to mention, the fact that you can try to negotiate with all the service givers and also PayPal, for example. So I called the PayPal representative in Israel, and I was able to lower the fees based on my revenue. So also all the time, and once in every 6 months, I call my bank customer support, and I ask them to lower the fees. So negotiating with all the different bodies, financial bodies, is something very powerful that I do, and I also think all the listeners should try to do as well.
Definitely, that sounds like a good one. And also negotiating with your suppliers as well. As your volume goes up, if you don't ask for the discount, they're not going to give it to you. So realize that when your volume increases, you've got a bit more power with your supplier, and go and ask them for the discount.
Yes, and stay on top of those things. You mentioned, Ron, about consultants having a positive ROI. Let's try and not think about consultants like for these big companies like McKinsey and Bain that are charging thousands of pounds an hour, and think about just like paying $100 to speak to someone for an hour, and that becomes a lot more manageable. And that person should be paying for themselves. Our business is all about trying to deliver value for our customers. We should be able to help you make that decision more effectively or quicker, or we should help you be able to prove to that supplier that you have hit the threshold and therefore you are due the discount, or even point out to our customers when they've hit the thresholds by presenting really insightful information that says, you know what, I've hit 10,000 units this month. I deserve that rebate where it drops down to 50p a unit rather than 60p a unit. So those people should be helping you do that. But Ron, you're a hustler, right? You're setting up your own business. That's what it should be. Like, you should be going out there trying to find deals and work things through.
And also cashback deals, which you mentioned, rebates. Rebates, also finding the correct credit cards to get cashbacks. It can be like 2% of the revenue, which is amazing in some certain cases. So there are a lot of loopholes that you don't know until you encounter them. And most of the time you encounter them by chance, or if you hire someone that really knows what he's doing. This is why consulting is so important. Great, guys. Is there anything that we forgot to cover? I mean, I enjoyed this very much and I would like to maybe do a follow-up, but for today, is there anything that we didn't cover?
I don't think so. Not from my point. I think it was really good chat. Yeah.
I guess if any of your listeners like what we said and need this service, maybe they need a UK company to help with setting up a PayPal account or Stripe account or whatever it is, because in their local country it's harder to set it up, then come and use our service. If you note that you listen to Ron's podcast, then we'll give you the first month for free off our service, and we can help you set up a company and make sure you're all compliant for that. And hopefully give you some insightful information about how to make your business better.
So where can people find you guys? In the website? Do you have also like social channels or mainly through the website? All
the social channels, Instagram, Facebook.
Edition.finance.
Edition.finance is Instagram. Editionfinance.co is our main website. You can schedule a call on that website, or you can just click get in touch, give us your email address. Just make that you listen to Ron's amazing podcast, and then we can give you 1 month free.
Awesome, great. And I also want to mention, you already mentioned this, but opening a UK LLP might be a good idea for people that are not UK or US based, that are finding it like trouble with payment processors and stuff like that. So if you guys thinking about this, so just contact the Edition team.
Absolutely, yeah. Yeah, we can definitely help that.
Great. Okay, thank you so much, guys. Take care.
Thanks, Ron.
Thanks, Ron. Take care.
Take care.
Hi guys, this is Yaron again. Just a few more things before you take off. Number 1, if you want to learn more about e-commerce and marketing, make sure you check out our YouTube channel, which is called EcomXFactor Official. Number 2, check out our Facebook group, which is called EcomXFactor Marketing and E-commerce Mastermind. This is a great place to ask questions and connect with other business owners. And last but not least, if you enjoyed this episode, please make sure to share it with your friends and colleagues, plus leave a review at your favorite podcast app.